excited to have you on. I think Tplus is kind of this, weird, confusing thing with a bunch of amazing promises. So excited to kind of peel back the layers of that a little bit. So
I would like to call out the white room again. This is very bullish for founders. Very limited things in the background, nothing on the walls. There's a consistency here I'm seeing with people building cool, interesting things. I just pointed that out. Over to you, Josh.
Yeah, so co-founder of Tplus, a very good off-chain DEX with 1 millisecond execution times, order privacy, support for every asset and chain, and the best possible quote. So, all the things you could want when swapping. So can you give us kind of the smooth brain explanation of how Tplus actually accomplishes those things?
100%. So think of it as a CLOB in a TEE. If those are jargon to you, it's a central limit order book like NASDAQ or Binance. Effectively the most efficient way to do price discovery and have deep liquidity. So that's like the gold standard. AMMs are very cool, but they're not the best for price discovery. The reason that we haven't seen more CLOBs on chain is because you're limited by consensus and block times. So you end up slower. And then relative to Binance, it's like not even competitive. So we put it off chain. So we are competitive to Binance. And we put it in a trusted execution environment, which is effectively an off-chain smart contract. Think of it like that. So that it's still decentralized, it's still permissionless, it's private. We can't see your trades. No other market participants can see your trades. We can't hunt your stops with our internal market maker. Binance has been accused of that. There's no proof. But those types of things matter a lot for getting the best price, having great execution, market makers having the confidence to quote the tightest spreads possible. So that's kind of how Tplus works in terms of like the actual order book and matching. But then the other piece of this is settlement, which is all happening on chain. So we have a deposit vault on every chain. The user can put SOL into the Solana deposit vault, swap it for USDC, do anything that they want inside the CLOB. And then when they're ready to settle, they can withdraw USDC on base through the base deposit vault. And so then now they're flat, they're out of Tplus, they did their thing, and the market makers kind of handle everything on the back end.
Can you talk more about how the like delayed settlement works for market makers? Because it's pretty cool that you can kind of choose when to settle. You can wait for better quotes if you want to. You can settle right away. So can you talk about those mechanics?
100%. In traditional finance, you get T+1, T+2. This gives these brokers time to settle up their books. So maybe they're maybe a big trade comes in, someone wants to buy an asset, then 10 minutes later, a big trade comes in, someone wants to sell the same asset. So like they are just matching that up and they don't have to actually deliver the stock intraday, which is a very expensive process in TradFi. You've got a transfer agent. It's complicated, especially with like international swaps. So if you have to do a Forex transfer, it's just better just to give people time to settle it. So that's how the traditional world works. Now, crypto brought in this age of like instant settlement, which is really cool. Like the fact that I can send you $100 million worth of Bitcoin across the world in 10 minutes, and it costs me pennies to do it, or even faster. We can use Solana and send USDC, and it's a stable coin, like huge innovation. But in terms of market structure, it's actually not the most efficient way to go. So that's why we separate settlement and execution. For the user, they deposit, they swap, they can withdraw instantly. We're delaying settlement and execution for the market maker for their capital efficiency purposes. So yeah, it's arbitrary, Tplus whatever, Tplus 900 days, Tplus 0.01 seconds. Just as long as you're solvent, we really don't care because you'll also be paying interest on your borrows. So you have an incentive to close the position out. But yeah, it's something that prime brokerage desks do. Big institutions are usually using some form of delayed settlement. It's just never been done in a decentralized, permissionless, trustless way before.
So that's my big question. Like the why now? Like what has changed that it's allowing this product to sort of be built or to come to market today?
So Intel's TDX platform, which is the TEE that Tplus uses, hasn't been readily available in cloud infrastructure providers until much more recently. My co-founder, Marcus, has been dreaming up a product stack like this for about the last 3 years, and it really hasn't been possible. He looked at a bunch of different ways to make it technically possible, and Intel TDX is the big unlock that enables it.
What are the downsides of the DEX being off chain? Like what's going to piss off kind of on chain Max user about this?
It's a good question. I guess like you have a risk vector. You have like the chance that a SWAT team comes in with AK-47s and raids the Google Cloud server center and kills the guard, and then is left with the Intel TDX box for 6 months and is able to physically hack it, and we don't know this. So like, that's a problem.
What a phenomenal answer. Okay, so I mean, I think this is obviously a very competitive space, and it sounds like you're sort of building for more of an enterprise, at least one side of the market that you're going after. But again, pretty competitive space you're stepping into. So often technology isn't enough to differentiate. You talk a little bit about how you're thinking about going to market, especially on the consumer side.
A question I get all the time, because going 0 to 1 bootstrapping a liquidity venue is like a huge problem historically, especially like we're used to AMMs and new centralized exchanges or whatever. Tplus isn't like the primary source of liquidity, so we don't have to have our market makers have a ton of capital posted on Tplus, which is one of the biggest costs to convincing a market maker to come and make the market. A club is nothing without having a market maker make the market. It's effectively an RFQ. It's, Jesse, Josh go, I want to sell ETH at $4,100 and $4,200. And then I come in and I go, well, I want to buy ETH at $3,900. And like the spread is like completely separate. So you can do those RFQs, and I guess a bunch of retail participants could contribute, but it'd be incredibly efficient without a market maker coming in and making every single market. Now, Tplus is like every asset, one box. So in some instances, like a market maker might not be picking up a brand new coin, and it'll just look like an RFQ. But in most instances, when an asset is listed on a centralized exchange and it has multiple AMMs that it's trading on different chains, so like ETH, the easiest one, ETH's got a price in a ton of different places. A market maker will have an internal price where they think, okay, I can buy ETH for 4,100, I can sell it for 4,300 until I get new information, and then I'll update that price range, right? There'll be, I like to say Binance has the correct price. It's the most liquid venue. It's like what drives the rest of the market. So Binance has the correct price. AMMs tend to have the wrong price because as soon as ETH moves on Binance, someone has to rebalance those AMMs. It doesn't happen automatically. So some market maker has to go, all right, ETH has gone up. So I'm going to buy the ETH on the AMMs and sell it on Binance. And now the ETH AMM price moves up to the Binance price. Tplus has the best price. We're sitting in the middle, and we make it extremely easy for the market maker to go get the AMM price. They don't have to have their own capital. They don't have to rebalance. They don't have to have inventory on all these chains. Like those are some of the biggest costs for them to go arbitrage the AMM. So what they do is they use a user's deposit. They go hit the AMM, put it back in the deposit vault, and that happens in like one block. It's like an atomic swap. So on base, like 400 milliseconds. They're borrowing the user deposit for 400 milliseconds. They hit the price, put it back. They can do that on Scroll, ZK Sync. These chains where there's what, 50, 60 chains that probably have an active ETH market. You can't just hold $300,000 of inventory on every single chain unless you're winter immune. So now a small market maker has the balance sheet of a huge market maker. And as long as they're able to build those really fast execution, last leg systems, then they can compete with the market maker with huge depth. And they're more efficient than the market maker with huge depth because they don't have to rebalance across all the vaults on every chain. So you've got this constantly adjusting and fluctuating price of ETH. You've got market makers in Tplus able to quote against all on-chain liquidity. and OTC liquidity, P2P flows, block builder auctions. There's a ton of ways that you can use up your ETH. You can do just-in-time liquidity provisioning. So there's a lot of methods that they have to get a better price, to get the correct price to quote, to settle. And then on the other side, they can hedge with Binance. So this is just like without any traders, without having to pay market makers, they're going to come use Tplus because it's a better system for them to do their normal operations. And oftentimes market makers, I might be going on a little bit too long, but this is an important distinction. Market makers aren't super sophisticated at getting AMM price into centralized exchange often. Maybe they're just best at like quoting against 4 different centralized venues and having some like proprietary OTC flow or something like that. Who's good at getting AMM prices? Solvers. So the market maker will be quoting. They'll be like, okay, I can sell ETH at $4,103. And the solver goes, okay, well, I can buy ETH at $4,110. And so the market maker is quoting in Tplus. The solver sees that inefficiency. They go on chain, put it in the club, and act as a taker. And so they fill the market maker. Even though the market maker is happy, the solver's happy, like no one's upset in this situation because they're both making money. Just one system is optimized for the on-chain leg. The other system's optimized for like arbitraging and across all these centralized exchanges. So all that to say, we've got a couple market makers that are already really close with, that we gave allocation to our fundraise and who we're friends with and we know here in New York. And they're going to be built on Tplus day one. They'll be extremely deep with their quotes because they have all on-chain liquidity to quote against. The question is like, how many markets can we get covered, right? So ETH will be an obvious one. And I want as many markets as possible. This should be like the place to come to get the best price, regardless of what asset. So that's kind of it. And there's volume happening without traders. I mean, we're going to have traders, but you don't need a trader. You like just the fact that the price moved up on Binance is going to necessitate volume through Tplus.
Interesting. When is launch? It's not live yet, right?
Love it. I love that the questions are going like, how does this work? How can I use it?
I mean, I saw that I opened the site and I was like, I already want to use this. I don't even know what it is.
Yeah, because they're telling you that you have to be somewhat smart to go use it, or you just have to wait long enough.
I mean, I think the exotic cigarette convention did more for me wanting to use this product than anything else.
He's like, yeah. Thanks for the explanation.
Yeah, I love that. We have my friend Chris made a highlight reel of some clips from the exotic cig convention, so hopefully we can post that today and give you guys a little bit more FOMO. I wish I had a firm date that I could give you guys, how software development goes. But I will say like the alpha will be ready by fall, and in that stage, I love a great user experience, and I think what's really important to go to market is when people try it, they go, hell yeah, this is great. My friends will suffer through some like front end bugs and like glitchy things and, hey, can you move this button over here? So I'm going to onboard, the guys that invested in us, my close network of traders, people that will like suffer through a couple errors here and there. Then we're going to onboard all the people that have been begging me to give them access. Then we're going to onboard the people that we really want excited about it and to use the product extensively. And then we'll go, full beta or full release.
2020
and everyone in the
2027 for you, Josh. Sorry, bud.
That's fine.
Hopefully 26. Hopefully Q1 26 is the estimate.
Charco, thanks for making.
But I want it to be great. By the time you try it, it should be.
I mean, having all the assets is kind of important, right? Like I go there, try to trade an asset that I want to trade, and I can't, and it's going to take me a while to come back.
Yeah, fair.
Right.
All right, man, we got to leave it there. Thanks for diving into the depth of what you guys are working on, and I guess we will. Josh likes to be into products before they're ready. Josh is going to be one of your friends, so he's ready to T plus.
Get you in there.
Let's go.
All right,
Pleasure,
thanks
for jumping on, man.
Best of luck.
Peace.